This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. It's 129.24, show number 560. Nick, you have a big announcement to make here, so let's just get to it.
Well, I'm retiring at the end of this month, and it's been a quite a long journey, but it's time to go ahead and call it a day and get to enjoy the family for a while. So I'll be retiring at the end of the month. Today's the 29th, so we have just a few more days. Wednesday, which will be Fed Day, by the way, I will be officially going into retirement.
Wow. Well, you've been threatening it for a long time. I never really believed you were going to do it.
Yeah, I have been, throwing it out there. You always have to make sure the situation is right, and sometimes you get called away to do some other things, and I think the timing is right now. So I am looking forward to it, actually. I'm very excited to be able to call it a day and pack it in, and it's been, quite a journey. A lot of people don't realize how long it's actually been, but it's been over 25 years, more over 30. But it's time, and I'm very, very blessed to have done this for as long as I have, and now it's time to just pack it in and go enjoy and go fishing on a Tuesday.
Well, you're going to be missed, Nick, by thousands out there,
I know, Kerry, and I'm very blessed, and I want to thank you too, because you've done such an excellent job. I know when we started this podcast, we did it, right in the beginning of COVID, right? Like who would do that? And hopefully we're able to help a lot of people along the way, and that always was the goal. And now it's time to really just go ahead and enjoy the family. And I've been very, very blessed and fortunate to have done this for so long.
Certainly have, man. And we wish you the best. And hopefully you'll get tired of going fishing soon, and you'll be back. I just have a feeling about it. Something about the excitement, the adrenaline, that's going to be difficult for you to just walk away.
Well, a few people have said that to me. Will you be able to really step aside? I'm going to do a little bit of teaching once a month. I'm going to teach within the money stocks. I'll do my market mastery class. We'll do one class a month for starting in March until the end of the year, into December. I'm also holding a GAN webinar coming up, a seminar, I should say, not a webinar, a seminar coming up on February 5th through 9th. We're going to do that live in Tampa Bay, downtown Tampa Bay. So that's going to be pretty much my send-off. And again, after that, Terry, I think I'm going to, just get the boat ready to go, because I'll do a lot of fishing Monday through Friday, and I'll skip the weekends.
All right. Hey, we like I said, we wish you the best. You will be missed for sure. And hey, if you do get tired, you know where to find us, right?
Yes, I do, Kerry, and I thank you again for everything. You do such a great job.
Hey, an honor. Been an honor.
Thank you.
Well, right now, the show must go on. So, hey, what's happening today on the major indexes?
Well, it's a little bit quiet for this Monday morning, but things are definitely going to heat up. This is a huge week for markets. The indexes right now are basically flat. You have the Dow down about 25 points, the NASDAQ up about 15 points. The S&P 500 is flat as could be, but the Russell's got a little bit of a gain there. That's up about 0.2% as we speak. So it's a mixed tape, a quiet tape, but this is a huge week ahead, Kerry. We have mega cap stocks all reporting: Microsoft, Amazon, Apple, Meta, AMD. All of these big companies are reporting this week. So this is a huge week ahead. And then on Wednesday, Kerry, we have another big event with the Federal Reserve coming out, making their policy rate decision for the United States. Obviously, I don't expect them to do anything this week as when it comes to cutting rates. I think they're just going to stay put and sit tight. But the verbiage will be very important. Remember, in December, Chairman Jay Powell pivoted, and he did it suddenly. Nobody was expecting it. So you never know what they're going to say going forward. But I don't think they're going to take a victory lap here. I'd probably expect them to go into a little bit more of a hawkish tone because the markets are up so much. But it's a very big week ahead.
All right. So big week ahead, big mega caps, all that good stuff, right?
All that good stuff. And remember, these mega caps like Microsoft, Apple, Amazon, Meta, AMD, they're all priced for perfection. And what that means is that a lot of the move that they've had is already baked into the cake. So they have to really surprise and shock the market in order to go significantly higher, because these things have all been up, so much since December.
Yeah, that's for sure. So oil, natural gas, what's going on there?
They're getting pounded today, especially natural gas. Oil right now down about 1.2%, 3%, but nat gas is getting pounded today. And it's been a really, really rocky road. Nat gas has been like an EKG over the last few months, and that is the case today. Nat gas had a really big day on Friday, and then today it's given back, a lot of that move. So trading down by about 8% as we speak. So it just continues to be a real rocky, choppy environment. You have a lot of the energy stocks all trading lower, not down a lot, but just, all over the map as of late. So energy's become one of the tougher trades as of late, as they've, just been all over the place. And, I don't like those kind of markets. Recently, I was in oil. I pulled I got out of that trade. I made about, a little over almost 6% on it. But, again, it was just too volatile. And when you get those kind of patterns, they make you a little bit seasick, and sometimes you just step away from them and let the market clear up the noise.
Yep. That's always a wise move. And hey, so the Fed announcement is coming on Wednesday. What are you thinking it's going to be?
I think it's going to be a non-event, really. I think they're just going to sit tight. They're not going to say anything. They're not going to cut, I should say. They're not going to cut rates. They're going to keep the Fed funds rate right at 5.25%, same place it's been there for a long time. And the reason I'm thinking that is because the 2-year Treasury note yield is not threatening the Fed funds rate. The 2-year note right now is sitting at around 4.3%. So if you're looking at, wiggle room, the Fed has it right now. They have a lot of it. And they're not going to be threatened by the 2-year Treasury note yield because it's so much lower than the Fed funds rate. Now, if the 2-year starts to creep up towards 5%, 5.25%, then the Fed has got a lot of problems. That ultimately is going to happen, but it's just not in the cards right now, probably for the next 6 months or even this year.
So they've really gotten out ahead of the market effectively, which is unusual for the Fed,
Yeah,
They're playing catch up.
That's right. They have gotten, because the 2-year is really, honestly, we don't even need a Federal Reserve if we just let the Fed funds rate, or so-called, whatever we want to call it, let it just, float with the 2-year Treasury note yield. That tells you where it needs to be. So the Fed's got some wiggle room right now, and they're going to, probably jawbone the markets a little bit. And, the verbiage could move a little bit, could change things in the market, but they have no problems right now. They're what we would call comfortable at the moment.
All right. Well, that's unusual for them. Like I said, they're usually playing catch up.
It is. But, because Powell pivoted in December, and, the market now is baking in rate cuts. It's no longer baking in, further rate hikes. So eventually he's going to have to cut rates. I mean, I don't think he'll do it this meeting. I think in March, there's a slim possibility. I would lean more towards the latter part of the year, maybe when you get to June, July, in that period, if there's going to be rate cuts. But he can't cut much, and rates are not going down very much either. So just remember that. I know while the market gets giddy and likes to look ahead, he can't really cut very much, and rates ultimately are going to go higher down the road. So just be aware of that.
All right. And when do you think they're going to be going higher?
I think after this year. I think as we get through, 2024, he's got wiggle room here. But, as you approach 25, 26, 27, 28, The geopolitical landscape will just be too much, and he'll have no choice because the Fed will have to either raise rates once that 2-year moves up, but the 2-year is basing right now. And when you put in a base carry, the longer the base, the bigger the advance on when you start to make the preceding move up. So it's going to happen, and it'll just take a little bit of time. But right now they're comfortable, and we'll enjoy the rally as it holds.
All right. Well, that is interesting. So what is gold doing for us now?
Yeah, gold today catching a little bit of a bid. It was a little bit soft early, but right now up about 0.3%. Gold holding up above that psychological 2,000 level. Today it's trading at around 2025. So we're going to watch this pattern carry over the next week or so. I said that last week, and that's still the case. Nothing has really changed here with gold. It could go either way. It's not on breakout mode. You need to probably close above 2,100 to break out. But if it breaks below 1,900, then it's in some trouble for a little bit. But either way, gold right now looks pretty solid. It's just really hanging in there, way better than I would have expected. I really thought by now gold would have started to come down and got people a little bit scared, shaking out the loose hands. But for whatever reason, it continues to just chop in a range, and that's been the case since November. And we just have to watch the pattern now.
All right, and finally, Bitcoin.
Yeah, Bitcoin had a really good pop on Friday, and that was expected because we hit our downside objective. Today, Bitcoin is upticking a little bit now. Actually, it's improved a little bit more, and I still think we'll get more of a bounce here from that oversold condition. So good pop for Bitcoin right now. We'll give it the upside bias. When I look at the Bitcoin futures chart, I think the 45,000 area is probably a good little near-term resistance point. Then you'll have to just continue to watch the pattern. But it went right down to the level that we talked about at 39,600, and it's reacted very nicely to the upside.
All right. Well, I'm up a little bit on it, buying it every Sunday at like midnight. Just a little bit, not a lot.
There you go.
Just selling it when it, just kind of swing trading Bitcoin.
Yeah, so when you get to 45, 4,600, I would probably take something off the table, trail your stop loss, and you're good to go. Put a stop in the money, and if it comes back down and takes you out, you still did well. But again, I don't see a big breakout occurring in Bitcoin right now. But it held its first big support level, so that's important. If you break through that level, then you got to really be careful. But right now, it's holding up fine.
All right. Well, that is it for today. We'll be back on Wednesday. Remember, go to inthemoneystocks.com. See how Nick has beaten the averages for decades. Get there while he's still there for a couple more days. And the Twitter feeds are at ITMS, at Nick Santiago01, at Kerry Lutz. Emails are welcome, KL@kerrylutz.com. We're going to get to some of them on Wednesday, which will probably be our last show for a while, Nick. And so send in the questions, write your comments, questions below on the YouTube channel. We'll see you on Wednesday, Nick.
Sounds good, Kerry.